I find that the harder I work, the more luck I seem to have. Thomas Jefferson. My friends, we work hard here every day, 10 to 15 minutes. That is all we ask. But again, it is a daily pursuit to learn how to analyze the market, how to do technical analysis, charting. That is what we do. We're all into fundamental analysis too, but regardless, you never want to buy at the wrong price. You never want to sell at the wrong price. You always want to buy at the right time and sell at the right time. And that is why we study these charts and we do all that we do each and every day. We have a great training for you today. If you're a subscriber, of course, you can subscribe for free at chartingwealth.com. Cutting losses is the key to winning. That is not playing defense. That is making sure that you live to trade another day. Everything we do here is looking at what happened in the past to help us forecast the future. That is with trends, primarily with weekly trends. That's what we look for. That's what we live by. Weekly vertical crossovers and then two-day recrosses going back in the same direction as the weekly chart. We've got a great book, Charting Your Way to Wealth. I urge you to buy that for yourself as an early Christmas present. You'll see a link in the show notes. And of course, we love our Patreon supporters. With that, every month we have a live question and answer. The first Wednesday of every month. That is the time and date of our session, 12:30 Eastern Daylight Time on Wednesdays. We have folks join us from all over the world, and we appreciate our Patreon supporters also. That 3-part training, Options Made Simple. You want to know options? We've got a great training for you. It's for free at any of our 3 levels of Patreon support. Let's jump into these charts. Market swinging up heavy today. We see the S&P 500 up 1.62%, NASDAQ 100 up 1.41%. We see bonds are down about 1%, gold down again about another 1.5%. So let's first jump into the S&P 500. What do we see going on? Well, let's start as we always do with the weekly chart. We went from a red open box candle yesterday to a green open box candle. By the way, markets are closed on Thanksgiving and stock market closes early on Friday, Black Friday at 1 p.m., bond markets at 2 p.m. So we will be providing reports both Wednesday and the day after Thanksgiving with that shortened Friday. We'll be providing you with the daily review then also. So again, hope you're looking forward to a big Thanksgiving. So we do have basically, what is that, 4.5 days of trading. So we'll be ready and working on that. Now, we see that the price percent oscillator on our weekly chart is spiking up. Remember, we had that weekly vertical crossover there at the week ending Friday the 13th. Last week was a slowdown in the up movement as shown by that red open box candle, and the price percent oscillator tracking along rather parallel to the red signal line, but now things are trying to take off, trying to hit a higher high over the prior week, not matching what happened in the week ending on Friday the 13th of November. But we do see that the derivative oscillator gaining momentum. Go to that 2-day chart. It was flat, peaking up now. Of course, we saw Monday ended the prior 2-day candle. So on Tuesday, that's just the first day of the latest 2-day candle. We'll see how that finishes off on Wednesday. Price percent oscillator heading up, derivative oscillator still losing momentum. And of course, we go to that 4-hour, the half-day chart. I'm used to calling it the 4-hour. It's actually 195 minutes. So what do we see going on? Hasn't crossed over yet, but we do see the derivative oscillator trying to cross over. We'll see, it did cross over. Price percent oscillator trying to cross over. We'll see. We aren't going to redraw our trend line yet because we don't have a crossover. We'll see what happens on Wednesday, and we'll see how this market continues to rebound. Of course, what are we really looking for? Let me go to the 2-day. It might be easier to see. Well, maybe, okay. We're looking to see if we're going to be able to press up. We're getting awfully close. Let's go to the weekly. I don't want to have to move. I'm trying not to have to move my crossovers around, but we can look. You can see the high for that week. The high was 364.38, 363.81. So we've still got another $50 or so to get as high as we were before. So we'll keep watching and seeing if we're going to be able to do that, hit higher highs and keep moving up. Now, let's go to the NASDAQ 100. And of course, we can see its prior high back where that weekly vertical, well, the weekly vertical crossover never ended, but that 2-day recross, we can see the high on that week, 299.14. The high so far, 294.98. So again, price percent oscillator flat, derivative oscillator still negative. This is the weekly chart. Look at that 2-day. It's been positive for a while, continuing to try to track up, but not reaching a higher high yet. So we'll continue to watch, keep our eye on things, see what's going to happen. Looks like the half-day chart, similar to the S&P, trying to cross over derivative oscillator, not positive yet. So we'll continue to watch, see how these charts develop. Going to have more up movement, again, to confirm things reaching higher highs, continuing to move up. Otherwise, we're just sort of tapping on that dome, and we might be due for a drop-off. So again, keep your powder dry, pay attention. Let's see how these charts continue to move. Now, we do see bonds. They are down for the day, about 1%. As we said, we're really into the second week of the markets trying to move up, peaked this last week, not reached that high this week. Derivative oscillator still negative. Price percent oscillator is about flat, almost heading down a little bit. So again, still negative on the weekly. 2-day, of course, it crossed over back on the 2-day candle ending Tuesday the 17th. That represented Monday the 16th, Tuesday the 17th. Then up for 4 days and now slacking off. Derivative oscillator still moving up. Price percent oscillator still positive, but losing some momentum. So we'll keep our eye on bonds there. And of course, we see that precipitous drop off primarily in the morning, not quite as far down in the afternoon, not enough to cross over on the price percent oscillator on the half-day chart, but the derivative oscillator did go negative. So again, waiting for bonds to sort themselves out. Little schizophrenia there, weekly down, 2-day up. We'll wait. Again, this market is still just sort of stuck there, trying to figure out what it wants to do. That's when it comes to bonds and stocks. Gold, however, rocketing down again today. Look at that big red down candle, just hammering down. Ever since gold peaked back on the week ending the 7th of August, it has just slowly been devolving and going down. Derivative oscillator gaining downward momentum. Price percent oscillator spiking over, going down. Look at that 2-day chart. First day of the latest 2-day candle. Look at that. Again, we had lots of down moves that we saw on Monday also. So again, gold just spiking down. Price percent oscillator and derivative oscillator half-day chart down in the morning and a little bit of a recovery in the afternoon. Not as far, and again, not quite as far down. So again, we'll continue to watch gold as it bleeds off and continues to move down. Of course, I would encourage you all who are practice trading on that 2-day recross to, again, continue to watch. Focus heavily on that 2-day chart and your weekly, and let's see how well you can do in your short gold position for your practice trade. That's where we are as we end the day. Hope you're getting ready for a wonderful Thanksgiving holiday. Remember, we still have charts to cover tomorrow on Wednesday at the close of the market, and again on Friday with a shortened half day. Stock market closing at 1, bond market at 2. We'll be here for you both days. Enjoy your holiday. And again, Tune in tomorrow. Tune in Friday. God bless. All the best from the whole team at Charting Wealth, World Headquarters.